Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video. We are going to be taking a look at smart money concepts. That's the chart that you see here, and on the Elliott Wave theory side of things as well. We'll start with the smart money concepts as it is slightly easier to understand than the Elliott Wave theory side of things. Ultimately here we're going to kind of review our current positioning. Okay, so this is the hourly chart paired up with USDT, and we are using Binance as our data source. So as you can kind of see here, I know it's a little bit difficult to see because it is quite small, but we do have a strong high and a weak low. Okay, so that in essence is showing us that we have a strong high position that is not likely to get broken. The price is not likely to go up higher than that strong positioning. Okay, that comes in at $27,663. Okay, so that's our high that's not likely to get broken. Our low is down here and it's a weak low, indicating that we are likely to go down lower than this level. Okay, now this is $26,361. Now, with that, we can see equilibrium. Equilibrium is an area that is basically 50% on the Fib scale, okay? And so an equilibrium range like this, usually price reacts to it. Either gets rejected or kind of confirms by pushing on through it. As you can see right now, our price action is heading up towards equilibrium. Equilibrium here is set between 26,981 and our 200 EMA, you can see it right on there, coming in at 27,042. This basically means that price action is more than likely, in my opinion, going to get rejected from this range, considering a couple of things. One, our equilibrium is in line with our 200 EMA, which at the moment is acting as our resistance, so you can kind of see across here and here. We've only really had a couple of moments where we're above that 200 EMA over the last few days. So I do think that is going to be resistance on the 200 EMA and resistance on the equilibrium. And we can also see that we have all of these red internal sell order blocks as well. It's not a coincidence that our equilibrium, our 200 EMA, and our internal sell order blocks are all coinciding, coming together right here. In fact, we can also see that we're inside a sell order block right now as well. Okay, so we can see, and we should acknowledge the idea that there's a likely move to the downside to be had here. This is also visible from our stochastic RSI that is overbought on this 1 hour chart as well. So yes, it is still possible that we rally on up, but the probability of that is incredibly low at this point. So smart money concepts tells us that we are in a bit of a bearish state of play. We can see here that there was a minor change of character from bullish to bearish, and the bullish one was just over there. Okay, and we can see that we have this change of character into a bearish state of play. And we can see that we've got a break of structure here, which is basically confirming that we are in that bearish state of play, meaning more downside was likely to occur. Now, it's not unusual for price action to go in the opposite direction briefly, kind of like a relief rally, before you go back in the trend direction. And trend direction in this case is down, and therefore a relief rally up towards equilibrium, just to where we were on the change of character, isn't terribly too unusual, and we can still see further downside here. So if I zoom out of this just a fraction further, okay, we come a little bit further out actually. Let me just pull this back up here. As we kind of come back a little bit further on this hourly chart, we can see that we are in a major bearish state of market structure here. And this is because we have these solid lines, right? So what we had going on here were minor, the little like dotted line break of structures and CTSs and all that kind of stuff. When you zoom out, you can see these solid lines. These are basically slightly more major level change of characters and break of structures on our hourly chart. Okay, so these are only relevant to the 1 hour chart, and we can see that we are in a bearish state of play. And I imagine that we are going to come down and we're going to get another break of structure, another CTS soon, confirming that we are still in that bearish state of play. So ultimately, smart money concepts here is telling us that we should be very, very prepared for further downside, and it is incredibly unlikely that we are to push up higher. Again, this is just a game of probabilities. Nothing is a guarantee, but in my opinion, it looks like we have further to the downside here for Bitcoin, assuming and based on smart money concepts. Let's jump on over into the more complex market structures, which are going to be Elliott Wave theory. Now, we are tracking a diagonal structure in over the last few days. Okay, now this is targeting out between $24,791 and $25,418. So unlike smart money concepts, Elliott Wave theory gives us a little bit more predictive capabilities over exactly where we think things are going to go in terms of the price action. Smart money concepts helps us understand the structure of the overall market and whether we've got institutional players pushing and pulling the market in very specific directions. The two things coupled together gives us a pretty good idea as to kind of what is going on. In isolation, each are good, but together I think you've got a powerhouse of analytical tools in your disposal. So on this diagonal structure, I went through this the other day. I don't know if I've still got it up here. Apparently I don't. There are essentially like 4 different things that you can find within a fifth wave movement: an ending diagonal, a contracting diagonal, an expanding diagonal, and I feel like there's something else that I can't think of right now. So yeah, we're trying to narrow down the options as to kind of what's going on. At the moment, I think that we have here a ending diagonal structure, and if we kind of draw this in, we have a wave 1 here with a irregular flat as our wave 2. We're coming down yet to complete our wave 3. Okay, I still think we've got to go and do that. And then we'll have a final fifth wave movement. Okay, we haven't completed wave 3 yet. We are still essentially looking for the C wave drop for our wave 3. Okay, now if I go ahead and just show you the measurements on this. So there's a Fibonacci relationship between the waves and each other. So wave 1 and wave 3 and wave 5, they relate to each other in very specific ways. You can see that we're looking for a minimum here of $26,215 for our wave 3 within our ending diagonal. So we want to check to see where we are on that journey. Okay, and if we go ahead and take this over to our high, we are targeting out down here on the 1 to the 1.236. Right here, which would be lower than 26,215. We're actually looking for 25,886 and 26,146. That there is going to be where our third wave is more than likely going to end and will be our C wave structure. Okay, that's kind of what we're looking for. We're going to pull that fifth wave over here. Okay, so we can see here we have wave 1, an irregular flat correction for wave 2. We then have a big drop down into our wave 3. We'll bounce for wave 4. Wave 4 can cross wave 1, doesn't matter, we can have a nice run up there if we need to, and then a final fifth wave movement taking us down. Now it could truncate. What I mean by this is that it might not reach our lower targets of 24,791 to 25,418. The main thing here is that we complete a 5-wave structure to complete our overall pattern on a slightly larger scale. And that is, if I zoom out here, you can see all these 1.6188 ranges, right? This is kind of what we're looking for. If I zoom out of this being the fifth wave movement, it would basically look like this. We'd have a wave 1, wave 2, wave 3, wave 4, wave 5. Okay, and then that would basically be nested as a wave 3 of this one. So wave 1, wave 2, all of that is wave 3, up for wave 4, wave down for wave 5. And then all of that would be, if we hit this low one down here, all of that would be in another 5-wave structure, which is a wave 1, wave 2, all of that's a wave 3, up for wave 4, down for wave 5. And then you can start to see the structures nesting into each other and starting to form out the overall direction of the trend, which would be to the downside. A trend reversal is in play here, but not yet confirmed until we reach some of these additional layers. Okay, so it's looking interesting. We're getting some movement, we're getting some momentum, and we're getting some kind of, confirmation slowly over time that we are in this particular pattern. So we are looking to try to track this one down, find good entries, and kind of take advantage of the situation that's unfolding here. So for the most part, if I go ahead and remove these fib charts because we don't need them, what we can do is we can say, okay, well, it's unlikely now that we're going to push up higher than the 27,277 local B wave high, and we are likely to come on down here. Okay, this will be comprised of 3 waves. in itself, so expecting moves to the downside essentially. So everything looks like it's okay. If we do move up higher than 27,277, then it just means that we are still in the B wave structure, and only if we push up higher than our wave 2 will things actually break out of this structure altogether. So some interesting times. I think ultimately if we were to break up higher than 27,663, then we would pull into question what is actually going on here. Are we still in the wave 4 rather than the wave 5 and so forth? You'd have to move up quite significantly before you'd break out of this bearish structure at the moment. And so we'll be keeping a very, very close eye on all of that. I'm going to leave the video right there though, guys. A nice brief one, keeps you up to date with what I think is going on here with BTC. If you found it useful, smash the like button. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out, linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.